Hello and welcome to Crypto Weeklies. In this video, we are going to discuss Theta and its token Theta network and its token Theta, conduct machine learning based price analysis, regression analysis, as well as accumulation strategies and estimated bull run target for Theta. None of the content is financial advice. All of the content over here available for free, not just for Theta, but for top 100 cryptos by market cap. The link is on the bottom of your screen, cryptoweeklies.com. You don't have to pay, sign up, or content with any ads. It's free for all. The machine learning based price forecast for Theta. Before we conduct that, we will briefly look why we are discussing Theta today. Over the last 24 hours, Theta network has been rallying the most, about 27% over the last 7 days at around 48%. Market cap slightly under 3 billion, volume at around 427 million, almost more than 12 to 15% of the between 12 and 15% of the market cap. Price currently at around $2.93. In terms of tokenomics, this particular crypto has one of the best tokenomics. Circulating supply 1 billion, max supply 1 billion, total supply 1 billion. That is, all of the supply is in circulation. And the benefit of this is, again, not financial advice. This helps protecting whatever growth occurs in market cap getting reflected back in price. You can see essentially the same chart, the market cap chart and the price chart. That means if any growth is achieved in market cap, that gets reflected in price. By rank, market cap based rank, it's currently ranked number 53rd of the top cryptos by market cap. Again, this is not the first time that we are covering Theta on the channel. We have been covering since the bear market and the recovery year of 2023. You can see this video was over a 1 year ago. Again, this one year ago. We have been making videos again, at least 3 videos on the channel related to crypto, which is back then was ranked outside top 100 cryptos by market cap. Now it is one of the top 100 cryptos by market cap. So there would be more attention related to such cryptos over the course of the upcoming bull run of 2025. So if you are interested, please subscribe to the channel. Also give this video a like to stay updated. We'll start with the accumulation strategies for Theta. We'll start with the TWAP, or time weighted average price based model. This model did provide us a great accumulation range whenever the price was below this blue line. So right now that blue line is at around $1.66. That means price below $1.66 plus per this analysis is considered close to zero risk. That is again a range for accumulation. We were in this range for most of the November of 2024, as well as throughout May 2022 till about February 2024. Almost two years time to accumulate this per this model. Again, this model does a decent job but not a great job of identifying a top, but again provides a range for the top based on how the price is doing with respect to the time weighted average price. Right now the price is slightly above the time weighted average price, representing a risk of about 44% of accumulation of Theta. The DCA model, which is a regression based model, again you can see the polynomial regression, non-linear polynomial regression based valuation, fair valuation estimation for Theta, and also based on the time adjusted and proportional distance between the price and the polynomial regression based fair value. These color codes are assigned and normalized between 0 and 1 based on how risky it is to accumulate Theta. Again, this model has dual purpose. First, to identify bottom. So for example, whenever the risks are less than 20%, that means reward outweighs the risk when at that point in time. DCAing at that point in time per this model makes the most sense. Again, you are essentially avoiding buying the top per this model, and the opposite of this is again DCAing out of the market. Let's say above 60% risk. Whenever the token presents more than 60% risk, you can see that over here most of the sales would occur in that phase of the market per the model. Again, if you can lower the threshold to, again, to your own discretion. Let's say whenever especially for an altcoin which is not that famous such as Theta, it makes sense that DCAing out of the market above 40% risk or 50% risk, again per your own discretion, to identify potential top. Because cryptos like Theta again stay in the sun for only a handful number of days before there is a new narrative taking over the market. Again, This has been the case ever since 2021. Again, you can see only a handful number of days spent above, let's say, 50% risk level, most of its existence above this, below this risk. So per this model, again, if you were looking at some of the moderate price target for theta between $7.50 till about $10.43, again, that would represent about between 2.5 till about 3.5x gain from the current price of around $2.90. In terms of looking at some of the technical levels, again, the price, this is the weekly price action of theta, has been previous all-time high has been at around $15 and representing a low of about 50 cents in the bear market. The current move, in terms of the Fibonacci or Fib levels, the current move, if the rally were to go as high as around $4.51, the last time theta did fail going to this $4.15 level back in March 2024. Now the $4.15 becomes a target to watch for. That would represent the first interesting fib level or Fibonacci level. The second fib level of interest is at around $6.37, and if the token were to retrace half of its previous all-time high, retrace to that level in the upcoming bull market, that would represent a price of around $8.16. So again, from the current price of around $3 to $8, it's a 2.5x. Even if it were to reach and the half of the retrace half of the move, most of the decent cryptos go to this 0.618 fib level, currently at around $9.96, representing more than 3x from the current price. So the 618 level is one key level to watch per the technical analysis for theta. We'll briefly look at how much bull market have we completed to get an estimate of how risky the current market conditions are. This is the normalized risk between 0 and 1 based on how top 100 cryptos are performing, and it's color coded from blue to red. Blue representing the lowest risk, low risk in green, moderate risk in yellow. Orange is high risk, that is between 0.6 and 0.8, and anything above 0.8 is this highest risk. Right now, per this analysis, the risk levels are at around 50%. That means that represents about 50% completion of the bull market. Again, you can check in December 2022, this model helped identify the lowest risk level at around close to zero risk. The color was blue. Right now we are in moderate risk level. The last time we were in the high risk level were back in January 2022. We haven't seen that yet. If the prices again continue to rally throughout the end of year, that is throughout December, then the highest risk level from this 50%, we might enter this orange territory, and that's where most of the altcoin action occurs. Historically speaking, the last time we entered the orange territory in the last bull run was back in, you can see over here, just zoom in a little bit. The first attempt was in April of 2021, and then it didn't take too long from going to high risk of this orange color to the highest risk. We took about 10 to 15 days from 5th of April 2021 till about 15th of April, and then not too long ago after that, inside 1 month, in early May of 2021, again you can see the first day of May of 2021, that risk level went to above 0.8, and again on May 5th, almost close to 100% completion of the bull market again. Or you can understand that in that context, anything above 0.6 risk represents a good time to identify if there are any decent sell opportunity if you have been DCAing over here, or when the market were cooled down. We did enter this moderate risk territory, but haven't been spending much time in here. The first attempt was at around November 18th of 2024, and now after a couple of days of cool down, again the market has heated up since November 2021 again. So this is one overall market health indicator. This is the indicator that I personally find most useful in my DCA journey. Again, tunes out most of the noise, considers price action for top 100 cryptos. Again, you can see multiple risk factors such as volatility, alpha, beta, risk adjusted return, and percent drawdown for top 100 cryptos. Again, this is one of the most insightful analytics on the channel. Again, to leverage this analysis, the place to leverage it is this peak value indicator. This is the and is a estimation of either the market is in this valley mode or has gone to the peak. That's why the name peak valley. We are again from the valley, we are going to a peak right now. If, that is the best way to describe it. In terms of the popular narratives in the market, again, the news sentiment over the last 24 hours is 55%. That is slightly bullish. You can see the narratives over here individually. The narratives which are gaining some of the popularity, again, the bullishness, the Bitcoin based narratives. But again, the new narrative which is up and coming is this altcoins related narratives, ever increasing in this size. Apart from that, some of the top layer ones and top 10 cryptos by market cap maintaining presence on this narrative cloud. This tracks the social sentiment related to crypto on YouTube and X, and how many discussions are occurring related to that particular crypto, as well as overall crypto related content, such as is it more bullish or more bearish. Again, the bearish narrative has died down, bullish narrative has taken the center stage. So this identifies again one single snapshot of what is gaining popularity in the market. We will now spend some time on the machine learning based price forecast for Theta and attempt analysis of how the price action could look in the future per the machine learning model. This is the weekly price action in white, average weekly price action for white in white in since 2018. Theta has been around for 2 market cycles now. The bull case for Theta at 1 standard deviation or 68 percentile confidence, which is a non-euphoria bull case for Theta. Again, if the market are exhibit euphoria, this is not the euphoria case. This is 1 standard deviation case, a regular bull run case for Theta between $2.62 till about $6.41. The euphoria case for Theta is this 95 percentile or 2 standard deviation moves, like what we witnessed back in early December of 2020. Again, 4 years later, with the 4-year market cycle hypothesis, is December of 2024, between $2.99 till about $14.66. That's the 2 standard deviation case between now and early May of 2025. Again, we like to estimate what the prices could do only 6 months out in the future, because beyond that, the market throws a lot of what ifs and unknowns if we try to estimate too much further down the line into the future. For that, we have, at least for the top 10 cryptos by market cap, we have compound annual growth rate based models. That is again not in the scope of this video, because Theta is not one of the top 10 cryptos by market cap as of today. The directionality based model helps us identify this pink line, which attempts to discover what is the direction of the likely direction of the price action. Again, this is in an upswing. You can see from $2.28 till about $2.76. That means again, if there is no bullish or major bearish or major bullish news, the likely direction is up. In a bearish event or in the bearish phase of the market, the price action could trade between $1.09 and about $2.01. This is again all derived using machine learning techniques such as ARIMA, LSTM, and XGBoost. This is not some prompt engineered model or something. This is personally curated as a data scientist of about 7 to 8 years of experience in the market. The tabular version of this model is also available on the bottom. The way to interpret is this, and week by week is this. For this week, the base case was $2.30, the weekly average, that is. The bull case is $2.62, and again the weekly average price, although the daily price is at around $2.96, we are still operating within this 68 percentile bull case. The 2 standard deviation bull case is at around $2.99. That means 95% chance that price stays under this $2.99, and this 3 standard deviation case was $3.42. If the market again continues to stay bullish, the most likely scenario for week by week price action is this column at around 68 percentile bull case. If the market starts exhibiting a lot of euphoria, that means we witness blow off top, that 95 percentile bull case makes the most sense at this point in time for theta. And with this, we can move forward to the last model that we have, is the simple moving average price based model. Again, that is more of a model similar to a accumulation strategy based model, like we discussed about DCA model. This, instead of looking at the regression based valuation, looks at price of based on how it is doing with respect to the 20-week simple moving average. Has it too far gone from the 20-week moving average to the upside, or crashed too hard from the 20-week moving average? Again, this model helps identify peaks as well as bottom. I'll show how it does that. Let's say the hypothesis is whenever the risk is again the same logic, whenever the risk is more than 40%, and dollar cost averaging in that environment, you will find that the risk is printed in terms of wherever the actual blow off top phase of the market is. And the opposite of this is opposite is DCAing only when the risk is sufficiently low, let's say 10% or 20%. This model does a better job in identifying the top, whereas the DCA model does a better job in identifying the bottoms, loosely speaking. Right now the risk levels per this model is at around SMA model is at around 40%. And if you were to extrapolate what the moderate price target for theta would be in this moderate to high risk environment, that is between $7.63 and $9.78. The kind of lofty goal for theta per the model is price action between, when the risk levels are quite elevated, is between $10.31 and $11.89. So as a composite of all the models that we have discussed thus far, we have excluding the machine learning price forecast, the estimated bull target for theta is available on this, not just for theta, for most of the top 100 cryptos by market cap, is available on this crypto risk reward analysis. The $2.95 price represents a regression risk of 8%, time weighted average price risk, as we discussed, 32%, SMA risk of 34%. The weighted risk is at around 20%. That means 20% risk, 80% reward. The estimated bull run peak based on risk reward analysis is at around $13.70. And this is again a conservative estimate. We don't consider machine learning based price growth or any price model output. So $13.70 theta represents about a 4.65x gain from the current price of about $2.95. So with this, I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.